Good morning. You're watching The Market right here on ET Now with me, Aisha Faridi, Anisha Jain, Nikunj Dalmia in the studios. And, well, we've made it to that 19,700 print and it's not been all that bad. After many days of a consolidation, we'll finally manage to defy all the weak global cues coming in, and led by blue chips like L&T, HDFC Bank finally has begun to participate in the recovery, and ICICI Bank as well has been gaining now for fifth straight session. In fact, it's been the longest gaining streak we've had in about 8 weeks, while FIIs continue to sell, touch wood.
You know, Aisha, while everybody's been talking about the gain and the rise and the frenzy in mid and small cap stocks, everybody's also missed the point on the Nifty, which is that this is the longest winning streak in last 8 weeks for 5 days on the trot now. It's been a straight line move. You've gone past the key hurdle mark on the Nifty, and it's largely because a fresh move has started in some of the global denominated stocks, and short covering, I think, is there. Let's look at where we stand in terms of the global averages. FI selling, yes, but that is not having impact on the market momentum. And now the outperformance, I think, is getting more and more real and more pronounced. In this mumbo jumbo of what's happening to interest rates and commodity prices are moving up, China is down, Indonesia is down, Philippines is flat, and Thailand has given negative returns, but India is right up there. So I think if you're a bull, you need to look at not just small and mid cap stocks now. Nifty and the Sensex, they are also getting ready. What we've seen now is a fresh built up in Nifty and bout of short covering in banks. I think banks have no problems. So post short covering in banks, is the bank Nifty now getting ready for fresh longs?
And I think it's important to also note that the FI selling quantum has been 9,000 crores in just the last 4 trading sessions, and we've managed to scale it all the way to that 19,700 mark.
I mean, that's such a valid point, that 9,000 crores, about $1 billion.
Yeah.
$1 billion getting out in just a jiffy, and markets are just standing tall, and Nifty is actually moving higher. Thank you, DIs. Thank you, SIP investors. That's what you would say, because markets are no longer a one-trick pony. I used to remember that every morning before we would get up, we would not look at the NASDAQ or the crude, we would look at the FI number. It used to be this one-trick pony that, okay, FIs are buying, markets are going higher, FIs are selling, markets are going lower. The only difference, Aisha, this time around is that there are a lot of block deals which are happening. There are a lot of PE deals which are happening. There are a lot of rotation which is actually happening within the market, and also a lot of IPOs are going around the corner. So that also is having impact in the way how the equilibrium of the market is moving. But FI selling is not breaking the back of the market. India is outperforming, and I'll repeat what I said. Everybody was looking at the change in the mid. Everybody's over-examining railway, defense, shipping stocks, but the real move in the Nifty in last couple of days has been mighty impressive.
Oh, well, yes, and that flows coming in from the retail, which we want to thank through the SIP, etc., is something which is actually supporting the DI moves, and that's flowing into the mid-cap and the small-cap arena, and that is where the bulk of the rally has actually panned out already. Yes, last week we have seen a bit of momentum come back in large caps, but if you look at the mid-cap and the small-cap space, those are the ones which have been outperforming quite massively, both sitting at record high levels, and the data should come up for you on the screen as to the fact that this has not always been the case. Yes, in short amount of time we might see a bit of outperformance and spurt come in when it comes to the small cap space, but if you look at the long term averages, there's no big coherence to that matter. In fact, if you look at the 5-year data, the small cap index has actually returned a negative number versus Nifty as well as mid cap index, which has managed to do well. In fact, if you look at the 3-year 5-year view, Nikunj, it looks like that Nifty 50 has pretty much done at least in line or better than the broader markets.
See, again, the challenge with data is that you can read it the way it suits you. Yeah. What is important here is that if you look at the long-term average, which is what is important, I think the mid and the small cap stocks have not really done anything exceptional. If you map the maths plus minus a couple of percentage points here and there, it is not like a wild outperformance which is happening. Now you look at a very myopic kind of a view, which is YTD or 6-month change, when the real rally in the Nifty and when mid and small cap stocks have started, I guess the number will look very bloated. Now what really matters right now is that how far are you away from the historical averages in terms of the PE multiples, and where are the historical averages. On an historical average, if you look at the mid and the small cap stocks, they are not cheap, but they are not wildly expensive. bout of volatility in mid and small cap stocks after the recent run up cannot be ruled out, because you can make out that now the hand on heart trader, the folks who are coming in just for like they're not investors and they pretty much are momentum buyers, that action has started. But is there case for a sharpish reversal? Is there case for an absolute end of the road kind of a scenario for mid and small cap stocks? No, sir. All I'm saying is the historical averages, we are trading in and around the historical averages, which means the future return will get compromised, and some kind of mid-air turbulence in mid and small cap stocks cannot be ruled out, because there are a lot of pockets where it is just getting slightly stretched, the frenzy and perhaps the price action. But no ways the bull market in the mid and small cap stocks is over. We must also recognize the construct of the economy. The construct of the economy is that so many businesses are blooming, so many new sectors are getting added. I mean, defense looked like a small sector, but today it's become a major sector. Railways, who would have thought that railway will occupy center stage? Solar has become a big sector. Manufacturing has become a big sector. So that's the nature of the economy which is evolving. I mean, all NBFC stocks 15 years ago, they were small. All retail stocks 25 years ago, they were small. All IT companies 25 years ago, they were small. But the nature of the economy has developed in such a manner that new and new sectors are getting added. And that is what I think markets are endorsing. See, the real world will change later. The market assumptions, it changes right now. But why are we having this longest chat here? Because looking at the data and looking at the valuations, they are not cheap, but I don't think they are bubble.
Yeah. Okay, that's the take on the broader markets, and I guess India's business is only going to grow with the G20 summit kicking in. And just to put statistics here, the business of G20 and what it really could mean for India's economy, while of course most dignitaries are set to come in today onwards, and actually they have since last night also. We're talking about 2/3 of the world population, the countries representing G20 this time around, and that's 82% of trade in commercial services, 75% of global merchandise trade, and 85% of the global GDP, which is going to descend in New Delhi.
See, for next couple of days, we would be occupying the center stage in terms of all the global, global headlines. Whether it is the Western press or whether it is Asian, Eastern and Western. G20 in a sense is important. Why? Because it just gives you a different kind of a pedestal positioning. It is a clear indication as to how India has emerged right up there in terms of setting up the tone and the tonality of the global agenda. And the message from G20 this time is very simple. Vasudev Kutumbakam, which is one earth, one family. And it clearly means that this time around, the agenda setting would be centered around climate change, women development, empowerment and channelization of sectors and countries which need financing. This also means that in the near term, the entire focus of the developed nations could be centered around climate control. It could be centered around the fact that what really needs to be the big agenda in terms of restoring the supply chain. So it's a real change in terms of positioning for India. It's a victory in terms of how India has now a pedestal standing in terms of being an opinion maker, and how essentially the global powers and all the action now for next couple of days would be centered in India. So I think in terms of a market specific thing, you may not get anything. But in terms of a, like you say, that market price is a function of PE and EPS. So I think this is a PE re-rating moment for India and Indian markets. So if you're thinking that why Indian markets are outperforming, well, these are small facts which add together and it leads to this kind of an PE multiple and opinion re-rating.
Oh, well, yes, absolutely. That PE re-rating is what India is witnessing right now, given the fact all roads are leading to Delhi, and of course all the eyes across the globe will be on this G20 meeting and the headlines coming in from there. Of course, the who's who of the world are joining in. But talking about the who's who of the world, what are they saying about India? What are they saying about the key topics? Let's go across to Winnie to get a gist of all the global key commentary. Winnie.
Good morning, and the first commentary that is coming in, and this one is also on G20. This is from Sullivan, and he's highlighting in terms of, Joe Biden who's visiting obviously for the G20. What is he going to be discussing with Modi? He said that they could be speaking on the GE jet engines, nuclear tech as well. And obviously they are coming here. US is coming for the G20 with goodwill, and they aim to get consensus on most of the topics, as well as Biden will be meeting other leaders at the G20 meet as well. Moving on to the next commentary that we have, and this one is coming in from Mohammad Al-Arian, and it is on the currency weakness that we have seen in China. And he said that yesterday overnight what the weakness came in was mainly because of the further contraction in both the exports as well as the imports in the month of August. And looking at what is happening around the world in the economy, and this foreign exchange weakness will be something that will be seen by the authorities as more of a problem than a growth enabler. So that is a factor that he's keeping an eye out on. We have the commentary coming in, next commentary from Goldman Sachs, David Solomon, who's highlighting in terms of the tech IPOs that are there in the US and new tech IPOs that are there, and that he believes will be kickstarting the muted capital markets, especially if the IPOs like ARM and some of the other IPOs actually start going well. Then there would be a meaningful increase in the activity in the capital market. So surely keeping an eye out on those tech IPOs which will be coming out as well. We have commentary that is coming from Fed's president of Atlanta, who's Bostic, who's saying in terms of the inflation. One, he's highlighting that he's grateful that some bit of the inflation has started coming down, and he believes that now they are in a restrictive space, and one should actually wait out for this restriction to actually play out. Though he reiterated in terms of, yes, that inflation rate is still double the target of the 2% that they are targeting. And other than that, he also reiterated in terms of the economy still slowing down, as well as, signal that a rate hiking campaign should be given time to actually work. So let's keep an eye out on all these important commentaries overnight from the global commentators.
Right, okay, Vinny, we'll leave it at that, and let's welcome on board our chartists as well, find out what to make of the market setup. Vinay Rajani, Kunal Bothra as well, joining in on our studios. Kunal, let me kickstart with you. Morning, firstly, made it to 19,750 plus actually on the futures. Runway is clear for 20,000?
Yes. Much. I hope this time around we don't pitch stop at 20,000 and we go beyond the 20,000 mark. So yesterday's data I would probably call it as a picture perfect day, because you had slew of large cap stocks which started to show signs of pickup of price action. L&T was at the forefront of a very strong gain. You saw HDFC Bank making a decent comeback, especially in the second half. You had a very good mix from the mid caps and small caps, which also managed to do pretty well for themselves. But the more heartening part which I observed in terms of the data were two important zones. One on the Bank Nifty, where we saw another day of short covering for the bank index. The open interest dropped by I think around 5.4% for the Bank Nifty, making it as a cumulative drop of almost 15 to 16% in the last 4 or 5 trading sessions since the start of the September expiry. And the second, the most important part is that the Bank Nifty is back above the 50-day moving average. This, I think, could be a very strong case of a breakout for the Bank Nifty, and possibly the underperformance which we've been, witnessing over the last 1 month, 2 months for the banking index. I think that should now start to get covered up with this potential breakout of the 50-day moving average.
Well, yes, absolutely. Let's welcome on board Vinay Rajani as well. Vinay, what's your take on this outperformance, or at least the sliver of outperformance that we have witnessed in the Bank Nifty this week? Do you think mid-caps are going to be a bit slow now and Bank Nifty will take the lead?
Yeah, it looks like that for last couple of sessions we have been witnessing that large cap stocks have taken the lead and mid cap, small caps have started consolidating. So after a long time, in last week we saw Nifty 500 index breaking out from the consolidation of previous 7 weeks. So I think leadership is changing. I think large cap stocks and Bank Nifty, IT, there are other large cap sectors also can perform well. So here on, it looks like that fresh breakouts are there in large caps only. Mid caps, small caps are into continuation, but they have risen significantly. If you were to see the March bottom, from the March bottom, Nifty small cap index has risen more than 43%. So it might happen that for the time being, they may see running correction or consolidation, and leadership can be there in the large cap segment. So yesterday, as Kunal said, there was a fresh breakout in the Bank Nifty, and large cap banks were oversold also in private sector. So they could see some pullback rally from the lower level. So that will lead to the outperformance in the Bank Nifty. So yesterday, Bank Nifty actually gave a breakout. 44,600 was a crucial resistance derived from the downward sloping trend line, and that has been taken out. And yesterday also FIIs figure in the Nifty and Bank Nifty both. There was a long build-up in Nifty and Bank Nifty both. After a long time, we have seen that FIIs have created long in the Bank Nifty futures. So it is a good sign, and Nifty is obviously looking good and taken out the previous swing high. The only resistance I see in Nifty is around 18,867, which was the previous swing high. So there are good chances that Nifty will lead towards the new all-time high, and Bank Nifty will also participate in this rally. And small cap and mid caps can see running correction or consolidation in coming times.
Let's talk individual stocks as well. And Kunal, what's on your list?
So I'll go with large cap name HDFC Bank as the first bet, retrading a buy which I gave yesterday as well. Targets of 1650 for HDFC Bank looks quite strong and possibly could make a decent comeback given the way the volumes have shaped up for HDFC Bank. I think this could be a sign of a possible and a potential turnaround. So 1650 as a target, stop loss at 1575. And Deepak Fertilizer is also one of these stocks which has managed to spring up back into a weekly breakout mode, breaking past about the 200 moving average after I think trading below this level for the last 6 months. Looks attractive for a target of 700, stop loss 625.
Okay, interesting combo there, HDFC Bank and Deepak Fertilizers. Vinay, what is your stock-specific list like?
So as I said that I am bullish on the large cap stocks, I have taken the 3 picks from the large cap segment only. So first pick would be TCS. So IT index is trading at its 52-week high, and the dollar index, as we all know, that it has reached hovering around its 6-month high. So rising dollar index is a good sign for the Indian IT index, and IT index is already trading and outperforming. So I have taken TCS, large cap IT stocks, which has broken out from the symmetrical triangle on the daily chart, and it looks like that in the coming days it will outperform. So TCS can be bought at 3455, stop loss can be kept at 3400, target we can see at 3550 for the next 2-3 session. The second pick I am choosing is the power finance stock, the REC, rural electrification. So yesterday, after some running correction, we have seen that it resumed its uptrend. So as we all know that power and power related stocks and PSU stocks have been doing well. And REC is one of the stock which corrected a bit and again resumed its uptrend. So I would go with the REC, which is placed at 245. Stop loss can be kept at 241 and target can be seen at 254. The third pick I would choose is the NBFC stock M&M Finance. So it has also given a breakout from the consolidation. So in the previous session, we saw that it formed a bullish hammer candlestick pattern and follow-up buying was also there. So considering all technical evidences, I will go long in M&M Finance at 300 odd levels. Stop loss can be kept at 295 and target can be seen at 308.
Okay, so those are the top recommendations coming in from Vinay, TCS, REC as well as M&M Financial. These are the stocks you need to have on your radar. But a lot of other stocks which will be reacting to news flow as well. And Somit is joining us in the studio to talk to us about that. Somit, let's begin with Landmark, an interesting tie-up happening there.
Well, yes, from being only a premium car seller of Mercedes-Benz, they also have some other types, but most of the revenue comes from Mercedes-Benz. They have now signed a tie-up with M&M, and they will be opening a dealership in West Bengal, and they also plan to open dealerships in other parts of West Bengal as well, in Kolkata, Howrah, Hooghly going forward. So this could mean that they are also trying to move from being only a premium car seller to now a mid-premium car seller as well. Now they might be looking to ride the SUV uptrend that we have been continuously seeing in India, given that M&M has achieved a larger market share, and this tie-up could also aid Landmark cars now going forward. Now we all obviously know that it's a proxy play to premium car sales in India, but now given that they have tie-up with M&M, it could also benefit from the sale of SUVs and mid-premium car that we have been seeing. So that could be a positive thing for Landmark cars, right?
So it's a natural extension, right? I mean, when you got deep understanding of how the entire car retail space moves, then you would like to really go beyond the comfort of luxury cars. Because see, you have to realize one thing: at the end of the day, we may talk about frenzy and we may talk about very strong demand trends in the luxury car market. The luxury car market in India is not actually very large. It's like top of the pyramid, and there is historically we've seen deep cyclicality in it. Right now, because of the COVID, the K-shaped economy has just in a sense We've seen a surge because of that in the luxury car market, but historically the luxury car market in India has not been a very large and a very vibrant market, and considering that competition there for Landmark has only increased. Now the point you got to ask, and I mean, how do you understand the news flow? Landmark was getting certain amount of advantage because A, it was in luxury, and B, right now there seems to be a frenzy in anything which has got to do with luxury, whether it's Landmark or Ethios, or whether anything which has got to do with luxury retail. Will this diversification have an impact on Landmark in the near term because they will diversify? I don't think so. But will markets also start celebrating this diversification? I think it's too early to say that. But from a longer term standpoint, it's de-risking, and it's de-risking largely because you don't want this kind of a concentration. What if luxury sales to come down? What if there is a downtrend? What, we may talk about luxury right now looking great, but even pre-COVID also the luxury segment in India actually has struggled. I mean, there is a limit to affordability, right?
Absolutely. And the most expensive Mahindra SUV is actually XUV 400 EV, which is less than 20 lakhs.
No, actually they have more.
Yeah, I mean, that's the base
The
price
XUV
model.
700 and
Yeah.
all they have. So.
But anyway, let's move on. IDFC First, why is that in news?
Well, that stock is in focus because that stock has continuously outperformed the downturn also in the Nifty Bank. So if you see year to date, IDFC First has gained around 63%, while the Nifty Bank Index has gained just 4% from July 28th to August 17th. That's from peak to the recent low that we have seen in the Nifty Bank Index. IDFC First has gained nearly 9%, while Nifty Bank Index has declined 5%. And from August 17th till now, also if you see, IDFC First has continued to outperform the Nifty Bank, gaining around 8%, while Nifty Bank has gained around 2%. Now, despite the 63% run-up that we have seen in IDFC First Bank, the valuations are not that expensive. It is a bit expensive than IndusInd Bank, but still cheaper compared to its larger peers like HDFC Bank, ICICI Bank and Kotak Mahindra Bank. Now, given the sharp run-up, analysts are not expecting much for the stock to do going forward, but the stock has continued to outperform even the analyst expectations. And yesterday in Morgan Stanley conference, the company has, the bank has given a good growth guidance. They're expecting a 25% loan growth going for FY24. They're also expecting their cost to income ratio to improve, and they also said that despite a CET of 13.7%, they are looking to raise capital, and which shows the strong growth outlook that the company has going forward. So Nikunj, do you think that this run-up has outplayed all the positives for IDFC?
Samit, look, it was a story of disbelief where now there is a re-rating which is happening. First it's disbelief, then it is delivery, then it's realization, then it is participation, and then it is the vision. That's really been the story for IDFC Bank, if you frankly ask me. There was a lot of disbelief. There are a lot of naysayers who almost dismissed of the value of the franchise. Where Mr. Vednathan has really managed to turn around a very difficult business. Of course, there are tailwinds which are there in the sector per se. But IDFC Bank's outperformance, I think, is not done yet. It's not a very expensive stock. B, there are a lot of levers, and one lever which I think Morgan Stanley report, I'm surprised they are not talking about, is the cost to income ratio. The cost to income ratio can substantially come down, and we've seen that happen in case of State Bank of India when cost to income ratio came down, how the return ratios they improve. For me, I think that is the most important critical factor. The NPA is just not there. Their CASA ratio is very impressive. So they've got all the factors which in a sense will make the near to medium to the short to the medium term they're there, which will make IDFC's financial performance stand out. Yes, it's an actively tracked stock. Yes, the recent outperformance is there. But looking at years and years of underperformance, and the fact that where the price to book right now is, and when the markets are really looking for good ideas within the financial space, and the triggers are there, I think the best of the run-up in IDFC Bank, in my book, is not over.
Okay, that's IDFC Bank as well as landmark cars that you need to keep on your radar. We'll slip into a very quick break, but as we do that, it's going to be a stellar third quarter. That's the word coming in from Indian Hotels MD and CEO Puneet Chhatwal. Nikunj had an exclusive chat with him. Here's a slice of that interaction.
Q3, as you rightly say, has always been the most important quarter for the sector. And Q3 results are absolutely critical and important in their contribution to the full financial year. Now, having said that, Q3 is also blessed with Diwali. Q3 is also blessed with Christmas, New Year. And this year, in particular, we also have the World Cup cricket happening as an example. But if we take a step back and don't look at only these one-off events, what we are witnessing in the last 16, 18 months is that demand is outpacing supply. Supply is going to remain constrained. So if the demand continues to outpace supply, the occupancy levels will be higher, and that would mean that your ability to charge, which means the average rates, will keep increasing. Obviously, we are also coming from a very low base when compared internationally. So the first major factor is the demand and supply balance. The second very important factor for the sector is, as I said, all this G20 is helping in indirect marketing of destination India. And that will encourage more and more people to come in. And we are expecting as of November or December of this year to get back to pre-COVID level of inbound tourism. We are nowhere close to that number if we adjust it for the arrivals which are only related to G20. The third important factor going forward for the buoyancy that we are having in the sector is that the majority of the pipeline of hotels that are expected to open are not in the top 10 key metros. As per a report done by Harvard Consulting, more than 50% of the pipeline is in tier 2, tier 3 cities. That means new destinations. So I think all in all these things, when put together, should help occupancies and rates. And if rates improve, the flow-through improves. And if the flow-through improves, obviously the profitability and cash flows improve.
Welcome back. Well, shifting focus to the G20 summit now, the national capital is all set to welcome US President Joe Biden for those much-awaited bilateral talks with Prime Minister Narendra Modi. What's likely to be on the agenda for these talks? Could it be the progress on the GE jet engines or nuclear technology? Well, Delhi police continues to conduct its security checks across the national capital region to make sure that the safety is paramount. Stringent traffic regulations are in place. Online delivery services, barring medicines, have been halted as well. Shinchar Chaudhary, my colleague, is joining us with more details on what could be on the agenda for these key bilateral talks.
G20 is, of course, the biggest moment for India, the biggest moment of its kind for India since independence. And naturally, all members of the G20, except the Russian president and the Chinese supreme leader, will be here. Of course, Prime Minister will be meeting virtually every one of them. And also all those guests who are not members of the G20 but who are here, like President Sisi of Egypt, like Prime Minister Sheikh Hasina of Bangladesh, and so on. What we are hearing is that, of course, there will be a separate visit for President Biden, where the nuclear deal, the civil nuclear deal that was signed nearly 20 years ago, will come up for discussion, along with defense deals. The Americans are likely to bring up the M777 howitzer, and also perhaps one or two other things like the Striker. But beyond that, there will be lots to discuss with Biden. But there will be another bilateral right after that. That's the ceremonial visit of the Crown Prince of Saudi Arabia, Prince MBS, and that is on the 11th. But apart from those two, there will be meetings, bilaterals on the sidelines of the G20. And all of them, Prime Minister will endeavor to meet all of them, not just the other members, but also the guests, like, as I said, Egypt and Bangladesh and so on. So this will be a wholehearted effort by Prime Minister Modi to meet every foreign dignitary.
Okay, that's all the chatter around G20 and the who's who are going to descend in New Delhi. But let's take stock of the markets as well, and let's welcome on board Sanjeev Hasin too. Sanjeev, hi, good morning. Seems like 20,000 is pretty much here. Your prediction is bang on.
Fingers crossed, and good morning, Aisha. Yes, G20 is raring to go. Delhi is built like a fortress, so it's secure as a fortress. And we are expecting a lot of bonhomie on India. And that is evident that Apple has lost $200 billion just on the back that China exports, and the China slowdown is evident. And I think a large part of the foreign money is now destined to be in India. So yes, fingers crossed, 20,000 next week. I think the index has consolidated for a fairly long period and it was bound to give a breakout. But who's to question the veracity of the mid caps, which are now the darlings of the market, and every day you can pin down what you want to make money on, which is where a little bit of the froth may be a little bit problematic.
Yeah.
Okay, so are you suggesting that take some money off the table when it comes to your small cap investments and divert it to large caps instead?
Aisha, it will be easy for me to say that, but in a bull market, you will have excesses built in, and we'll only know the excesses getting over excess when the market's correct. Right now, I would definitely bat for Reliance, Apollo, or the ICICI of the world, but keep some part of your ammunition in dry so that when you do get some correction, you can actually use it. But like I said, the way the mid caps, particularly the PSUs, have been performing, it seems that there is a lot of under ownership as far as the mutual fund industry goes, and you're just seeing a part of the catch up over there.
Oh, well, yes, that catch-up is definitely happening. But hold that thought, Mr. Bhasin. I also wanted to bring on board my colleague Ankur. He's joining us to talk to us about what should we expect from the SAT hearing today, which is likely to happen on Z. Yet again, is an order likely today, Ankur?
Yes, Securities Appellate Tribunal is going to hear the petition of Subhash Chandra and Puneet Goenka, and now this hearing is important because we are expecting that SAT may pass the final order in the case. Remember, last time the tribunal had refused passing any interim judgment in the matter. In fact, the judge had mentioned specifically that he wants to pass a final order, meaning dispose of this case by September 8, and hence the hearing, which is slated to be heard later in the day, is very important because after the final submissions of both the sides, the tribunal will decide whether or not the SEBI's confirmatory order was proper or not. Last time there were a few comments from Securities Appellate Tribunal, and it was said that the time period which SEBI has taken in the investigation does not seem proper. So it will be interesting to see whether or not there is a stay on the confirmatory order of Securities and Exchange Board of India, in which Puneet Goenka was barred from holding any position in any of the merged entity, which means that after Z and Sony merger, Puneet Goenka cannot hold a CEO position, and therefore SAT's order will be very important for the future of Z-Sony merger.
Okay, Z continues to be on our radar and we will track all the news flow today as well. But Sanjeev, interesting news coming in on Landmark Cars. I don't know if you tracked this one. They're looking to add Mahindra vehicles now to their offering. So, I mean, clearly diversifying and de-risking in that sense.
Well, Aisha, this has been one of the new listings which we added closer to 550, 600. The stock has been re-rated over there. I still think the potential of the business, the management is excellent. And if you have a 2-year vision, then this is a must-have in a portfolio. Just to add that the stock has seen a very, very smart rally. But I still think that adding Mahindra will add to its portfolio. And like I said, now you have to be discerning in the type of stocks you get into. But if you recall, some of the new ones, the new age stocks, Paytm, Zomato, PB Fintech have been our top picks from almost half those levels. Landmark, as a disclosure, is in our portfolio. We are very, very bullish on this stock.
Okay, Mr. Bhasin, point taken. But yesterday we saw a big move on United Breweries as well. A new leader coming in there in terms of the MD and CEO. You look at the Alcobev industry also very closely. What's your top recommendation from that?
So, Anisha, good morning. McDowell has been a personal favorite since long. As a disclosure, I hold it since almost 18 years. And I think that the beverage or the alcohol market is just revving up. Look at a stock like Radico Khaitan. Look at the whole basket. And who's to talk about the consumption? You have the G20. You have the World Cup cricket. I specified Devyani International as one of my topics. And I still think that United Spirits in that basket is doing well. I don't track United Breweries because we have United Spirits. But I'm very bullish on Devyani International and the whole gamut of consumption. You've just heard what Mr. Chatwal told you about entertainment and hospitality in the hotel sector. I think these go hand in hand. Brands are going to rule the roost, and you have to stay with the large cap. So Devyani and United Spirits, as a disclosure in our portfolio, we continue to be very, very bullish on both these stocks.
The other one that I want to highlight is L&T. There's of course a CLSA note as well after them bagging that Saudi Aramco order, which they're saying is going to significantly balloon their order book. Of course, you know, they have the competency for it. It is one of the few preferred contracts as well of Aramco. And they're maintaining the buy, CLSA that is, and the target price is now 32.40 on L&T. Sanjay, what about these large caps which are also now beginning to participate? Of course, L&T has been the preferred one and only gets more dearer after this Saudi Aramco order. But the other one being HDFC Bank as well, which has finally begun its move.
So Aisha, in a long time, I have not seen L&T hit new highs. So has NTPC. So has Coal India, which has surprised, 220, 270 in almost a couple of months. And it's telling you industrials, power, hydrocarbon, engineering, electrical, this space is rocking. And there is no two ways. Cummins, Thermax, ABB, Siemens, you name it. L&T takes the cake. Now their order book is so large and the execution is, always questionable for the PSUs, but not for a private company like L&T. And now they're talking of double-digit margins. So I think power, infrastructure, and the likes of L&T, Coal India, NTPC, and I'll give you a couple of dark horses on the mid caps, which I think can be equivalent to the return, which if you are looking for that. But L&T overweight, NTPC and ONG, Coal India are also three overweight stocks for us.
Okay, why is Coal India overweight? Because if Coal India does well, NTPC should not do well. It's like saying if metal prices they go higher, it's bad for auto stocks. Either metal should go up or auto should go up.
So you are right, but Nikunj, take it with a pinch of salt that pass-through of power is now very, very easier than what it was perceived to be. I stay in Gurgaon, and DHBAVN in last 35 years has never, in the first year in 35 years, they're declaring a dividend, which they tell us that power generation, distribution and transmission, all that is in the best space ever. Power is at a surplus and power rates are rising. So yes, the hike, the cake on the pudding is that Coal India which was discarded because of thermal and other issues, is now revving up. And I think that this whole Ukraine-Russian crisis has actually turned out to be a blessing for them. You see the dispatch numbers. It's the third largest producer of coal in the world. And I think it is just getting its recognition. Now, the recognition can be a little bit hurting for one of the two, but the market cap is what you see as far as the returns go and the possibility of getting more upside because of the change in environment. So, like I said, both of them are must-haves in a portfolio, maybe on some correction.
Okay, now let's understand the technicals of railway stocks and also some of the I would say shipyard stocks. I mean, just mode of transport. First, HAL and BL did well. Why? Because they are making aircrafts. Then came your railways. And now the third mode of transport, which is the shipyard, they've also started going higher. So Kunal, what are the RSI levels for Kochi shipyard, railway stocks? How are they?
So on the daily charts, it's still at 85, 88 levels for Cochin shipyard. Even after that 20% up move yesterday, on the weekly it's also around 80, 85 levels. So
what does that mean?
So it's not overbought.
Okay, so despite the run-up, technically shipping stocks, I mean Kochi shipyard, Mazgaon are not overbought.
Yeah, they're not.
One can still buy them.
Yes.
Okay, what about railway stocks?
Even the railway stocks. So the best part is that the names like RVNL, IRFC, IRCON, all of these stocks, they went into a rally and then they went to I think a 2 or 3 month pause. I think if I'm not wrong, RVNL went through a consolidation on the 135, 145 mark. Now in that pause, the indicators got back into that neutral territory. In fact, most of the RSIs dropped below the 40 mark for these railway stocks. And then this late flurry which you're seeing into the stock price, or the flurry which has come back again to the stock price, has not lifted the indicators to an extreme overbought territory. So we are still at 70, 75 odd in terms of the RSI for many of these railway stocks, which again indicates that there could be more steam ahead into this space.
Basin Saab, mathematically, these stocks have done something what could be called as extraordinary in terms of recent outperformance. Kunal is of the view that technically they are not overbought, even though the run-up on paper is looking extreme. What should one do? Because now they've really become the talk of the town. I mean, everybody is talking about it. Everybody wants to chase them. What should one do? And I'll split the question into two, Basin Saab. First, for those who own, should they hold on? And for those who want to buy, how should they approach it?
Nikunj, that's $1 million question. These stocks, like you said, are in a whole bull market of their own. And who's to question the top, because under ownership is there. It also highlights that PSU businesses were unrecognized for a very, very long period. And only now the recognition is coming. So I agree that they are definitely overbought. They are due for correction. But look at the way the money is coming from mutual funds in the mid cap and the small cap, where they are raising that. And it tells you that mutual funds actually missed the bus. Most of them are underweight PSUs, whether it was oil and gas or GAIL or NTPC, and now they are just catching up. So I still think all corrections will be bought. My advice would be, if you hold these stocks, continue to hold, because you don't know, sky is the limit in the sense that they can rise higher. And if you want to own them, then start nibbling into them. Put some money now and put some money as you get some correction, but make a basket of stocks which you want to be. The CPSE ETF, which I've been advocating for the last 3 years, is up to 45 from 15. I still think that has 12 very good PSU stocks. Try and buy that ETF, or look for some mutual funds which have an ETF focused into PSUs.
Kunal, let's address the likes of a PFC, REC as well. Big spurt yesterday. Do you see a continuation?
So most of the indicators have gone back into a toppish zone for the power finance companies. So I would probably expect, and if you look at the last 7 days of price action, 7 or 8 days of price action, the stock formed a top. They went to a correction. I think PFC corrected from 275 to 80 levels to I think 250 to 54. So there was a 20-25 point correction for PFC. It's now come back to that 275 odd mark. Same is the case with REC. Made a marginal higher relatively with respect to PFC. But I would believe that these stocks would probably try and consolidate more. So it's always best to buy these stocks when the indicators are extremely toppish in the zones of correction. So a 10% correction is a modest correction to start off with when you're buying these kind of names.
Okay, so that's the take coming in on REC PFC. But Mr. Basin, I wanted your take on IDFC First Bank. We were just highlighting that stock earlier, how it's managed to outperform its other banking peers. But do you think most of the rally is over and it's time to switch into other names?
Yeah, good morning, Anisha. You brought something which is very close to my heart. Last 2 years, I was advocating this at 30-35 to Nikunj, and there would always be the argument that why should it perform? It was a lending institution and so on. And I only pursued that stock on the basis of Mr. Vaidyanathan. Today there is a sell report or whatever, but Morgan Stanley has been bearish from 30 rupees. How will he justify 100? The business is humongous. Mr. Vaidyanathan, according to me, is the best banker in India. And I see no let up in this stock. Yes, it's an expensive stock. It has run up far in excess. But who's to blame? There was so much of under ownership. And I think IDFC First is headed higher. As a disclosure for me, IDFC First Bank will be the next HDFC in the making in the next 5 years. So please stay put if you are invested. And if you are looking for corrections, then this would be a good opportunity as it consolidates closer to 85-90.
Okay. IDFC Bank, 95 rupees. Like we talked about it, first there was a lot of disbelief, then there was realization, then there was acknowledgement, then there is re-rating. That is how the entire curve of IDFC Bank has moved. At the peak of the COVID, the stock had just got bombed out. Nobody talked about it. Nobody thought about it. And then last 1 year, when the NPA problems of Vodafone and all the other challenges they had in the infra lending from the legacy book, when they got sorted out, the stocks managed to come back. Cost to income ratio for IDFC Bank is still very high. If they're able to bring it down, that is the trigger. For other banks, triggers are pure vanilla credit growth, pure vanilla fee-based income, pure vanilla growth in terms of technology adaptation. But for IDFC Bank, the cost to income ratio is something which can really work like a charm for them. Similarly for SBI, 2021 they were able to take the ROAs higher, and look at what happened to the stock. So if you're looking at large cap banks, very few banks have this multiplicity of triggers in the short term. For HDFC Bank, the merger is a trigger. For ICICI Bank, the turnaround has already happened. For IndusInd Bank, there is nothing large in terms of a trigger which will generate upside momentum, because a lot of the repair work has happened. For Axis Bank, Max and Citi, I think that is really work in progress. I mean, for IndusInd Bank, I could also say the Hinduja stake going up could be the trigger, but that would be conjecture. So, but since apart from IDFC Bank, which is one large bank, where do you think there could be trigger? I mean, it is not a bet on pure big picture of credit growth and a new credit cycle. Where do you think there are these small triggers which can generate more upside potential?
Yeah, first to clarify, Nikunj, you rightly put it that return on equity will take time. This is what Vaidyanathanji is specified. They had it was a lending institution which had benchmark loans at much higher rate of 9.5%, but almost 80% of that book he has redone, at much lower rates. So yes, there will be this cost of funding, but on the other hand, I think that the growth outlook and the NIMs which they have and the type of variable growth which they are looking at is very, very impressive. The other large bank will be ICICI, no question about that. At this price, if there is one stock I can put my money on, it is ICICI Bank, and I think that is now going into 4 figures maybe in the next 2 days and beyond. So 1100, 1150, if we have to go to 20,000, which I'm very sure is coming by next week.
Okay, so that's the take coming in. But you know what? The management meetings are underway. Of course, a lot of conferences are taking place, and my colleague Vinny will tell us what the managements of Eris as well as Page Industries had to say. Because we'll get her joining very soon, because Page Industries was one stock which was firing away in the trading session yesterday. They are targeting a revenue of almost 8,000 crores by FY26. Mr. Bhasin, what's your take on this, Page Industries?
So Anisha, this stock goes back to 2007-8 when I was in Deutsche Bank and we did an IPO, pre-IPO placement at 750. And in 2 years, it was 1900, and as a hedge fund, we were laughing our way after booking profit. And look where we are. Someone who makes undergarments is now rocking, and it tells you that the new millennials will pay anything which suits them. Those low jeans and your backside showing the underwear is a sign of strength. On a lighter note, I think Page Industries is a must-have. It's one of the best consumer stock, and I think the margins and the new portfolio which they have will only add to that. The stock has seen a sharp run up from that 37, 38,000. So wait for declines or add some. But these are themes for the next 2-3 years, which are not going to be changed purely on the basis of brands, which is why I stress that Indian Hotel or a Devyani or a United Spirits cannot be rebuilt.
Okay, point taken. Just wanted to highlight HDFC Bank and why it's in focus, apart from the fact that the stock has been running. Those are the flashes for you at the bottom of the screen. There is some inflow which is expected into HDFC Bank that will happen by September 15th. The FTSE and Sensex rejig related adjustment will happen. In fact, FTSE related inflow can be to the tune of around $500 to $550 million, and Sensex related inflow can too be around $100 million. And that's the reason perhaps we're already seeing a bit of a pickup on that stock, and that momentum will likely continue at least till September 15 if these kind of inflows do come in. I know we have talked about this, Kunal, HDFC Bank in terms of chart looks quite attractive, but what are the immediate levels that you're tracking apart from HDFC Bank, which is the second best private banking name?
So it's the first stock on the large cap front which has shown signs of RSI divergence. RSI divergence is a very important concept. It tends to give indications that stocks form a major bottom for themselves depending on the time frame where this pattern generally occurs. I think HDFC Bank has shown that on the daily time frame, which I believe is a strong prospect of not just a bottom formation but a continuation rally for the stock price. And the immediate targets which you'll be looking out for HDFC Bank is in the tune of 1650 to 1680 mark, which should take the stock back towards its closer to its previous swing highs. I think 1725 approximately was the previous swing high for HDFC Bank. Now, another private sector bank which also looks attractive, IndusInd Bank, is the stock which has given a breakout yesterday about that 1400 mark. after a couple of weeks of consolidation. You try and compare this with the other private sector names, Axis Bank, ICICI, Kotak Bank, all of the other stocks are still struggling to even recover from their previous swing lows. So IndusInd Bank has its slight edge in terms of the large cap private sector banking names.
I think the other important trigger, Nikunj, today also is going to be that RBI is going to review whether to continue ICRR or not.
See, what we heard, what Ankur has been reporting in terms of how things are moving, it appears that there would be an extension. Why? Because there is no respite in inflation. There is no respite in terms of where vegetable prices, food prices, or even for that matter, material prices are moving. Now, this is not an indication that Reserve Bank of India is going to come out and they're going to increase rates. This is also an indication that Reserve Bank of India has to do measures to ensure that the liquidity in the system remains under control. But frankly, a lot of times these measures may not really have a real big impact on the on the banking sector per se, and also real demand, because there are supply disruptions which have happened. Supply disruptions in vegetable prices, supply disruptions which have happened because OPEC has cut rates. So by puncturing the demand, by increasing interest rates, the solution is not there, because there's nothing Reserve Bank of India can do if you increase rates. What will happen to tomato prices? What will happen to prices of onion? That cannot be controlled. So RBI imposed ICRR just to suck out surplus liquidity. The net impact of that is not a very meaningful one, which is what we looked at when we looked at the data. An extension of that, I think, is something what markets was well aware of, considering where the rate dynamics right now are moving.
Yeah, absolutely. And just, it's significant because the markets did react in that knee-jerk manner when it did get announced and did cool off quite a fair bit. But now it seems an extension is very well in the price, and maybe a reduction in the quantum is what the street is also expecting. But let's also shift gears and look at some of the management meets as well. Nirmal Bang has come out with its highlights on Eris Life, and Nuvama has released a note on the takeaways from Page Industries management meet. Vinny is here to sum up all of those. Vinny?
Absolutely. So let's start with Eris Life Science, and here what Nirmal Bang is highlighting and the key takeaways that we've gotten is in terms of one, the growth. They said that the company will continue to grow, and they believe the company will continue to grow at 400 to 500 basis points is what the management highlighted to them, which is faster than the IPM of around 9% to 10%, which is expected to grow at that rate. So yes, better than that rate is what they're expecting to grow. Now the company also said they do not expect to add any field force during the year. Price hike benefits will start coming in from Q2 FY24 for the company, and there's no other large patent expiry that is expected during FY24. For FY24, the company highlighted that they have targeted sales of around 2,000 to 2,100 crore rupees with an EBITDA margin of 35%. And Derma segment is expected to outpace the company level growth and margin improvement post commercialization of Derma facility in Jan 24 as well. In the insulin business also, the company is confident of achieving break even in FY24. Let's move on and talk about what Nuvama has said in terms of the highlights that they have gotten from Page Industries. So ARS implementation, the management highlighted to Nuvama impact on primary sales behind that, as well as the rollout will take some bit of a time. That is the word coming in there. On athleisure, they highlighted they believe the current collection is enough to drive the growth. And other than that, they're contemplating exclusive and very different looking women EBOs in the key cities as well. Their FY26 target is at rupees 8,000 crores in terms of revenues. Expect the share of EBOs online and large format stores to touch 50% from 30 to 35% as well. They plan to add around 200 to 250 EBOs this year as well.
Okay, thank you, Vinny, for that. We also have Shivangi Sada joining us on the show to talk to us about the technicals. But before I come to you, Shivangi, I quickly want to take those two top mid-cap ideas that Mr. Bhasin has for our viewers.
Yeah, so Anisha, you recall a couple of days back, I gave you my top pick, JP Power. Now I'll tell you the rationale. 2,500 megawatt, 500 at Bina, 1320 at Nilgiri, and 400 hydropower at Vishnuprayag. This trades at a market cap of 6,000. NTPC, which is 10 times its size, trades at a market cap of 2,33,000. In the end, it is power by market cap which you measure. So I still think they are EBITDA positive, and this quarter the numbers will be very, very strong. Now, if you are looking for a little high risk but a good proxy to power, then it has to be JP Power at 9 rupees. I think this has the potential to easily double from here and still look cheap. Not on the only basis of market cap, but on the basis that the company has redone a lot of the debt reshuffling and now EBITDA is bound to show you returns. Second pick is again Tata Tele Services or TTML, which I think is only going to be the flagship company of the Tata as far as the consumer facing is being. And given the extent of digital AI cloud, Tata Tele is bound to be re-rated. So if you were looking for a bargain for the next 2 years, which can double, triple, it is Tata Tele for you.
So what is operating business in Tata Tele? The stock just went through this, this mania phase post-COVID, went from 5 rupees to some 300 rupees, came crashing down. I looked at the numbers. What is operating business of Tata Tele, which is where I'm lost?
Yeah, so Nikunj, now whether it's TCS, whether it's Tata Com, or whether it's Tata Elxsi, all three are, the big giants as far as their niche businesses go in digital, with more digital. This is a summary of the consumption arm of that, from ICT to AI to cloud to even Zoom. Anything you do will have a part share of that of their liaison. So the revenues will get built in over time as the consumer face comes in, but it is going to be a very, very big consumer face where margins will slowly accrete. We are looking at a business which has the potential to double, triple, even 4 times in the next 2 years on the back of the Tatas and on the back of the services on digital which it can provide going forward.
From Morgan Stanley. Yesterday it was JP Morgan, today it's Morgan Stanley. Deal announcements by large companies picking up. Markets, they are always say very smart, right? I mean, deals are picking up now, stocks have picked up before. Look at IT index in last 3 months, the IT versus banks or banks versus IT, whichever way you want to look at it. That's Morgan Stanley and financials. No, we want Morgan Stanley on Indian IT, we'll talk about it. But since the producer has fired these graphics, let me change gears here. What is Morgan Stanley conference indicating? Morgan Stanley did a large roadshow and they've showcased Kotak Mahindra Bank, Axis Bank, AU Small Finance banks. What is the common thread here? The golden thread which is connecting everybody here, stay with this graphic, is that Kotak Mahindra Bank is talking about a 17 to 23% loan growth. That's a large base. Axis Bank is talking about growth which could be higher than what the industry average is. And AU Small Finance Bank has given a loan growth guidance of 25 to 30%. Again, bases are different. But the positive thread here is that everybody is talking about late teens or loan growth between 25 to 30%. The second factor which you always look at is that you look at return ratios. Loan, ROA guidance, capital, and all the banks here, Kotak, Axis, AU Small Finance Bank, they are guiding to a strong construct. Now let's look at some NBFCs. The similar tone and tonality seems to be coming from NBFCs. Bajaj Finance, ROA guidance 5%. Shriram Finance, AUM growth of 15%. SBI Life, it's an insurance company, but they're talking about AP growth guidance of about 18 to 20%. So all the financials, whether it's insurance or NBFCs or banks, mid-tier, small tier, they're using words like growth. They're using words like strong ROA. And that is something which I think I've been pointing out, that banks have hibernated enough. We were talking, the reason why banks have underperformed is because they'd become more like a very consensus overweight view, and then a little bit of time-wise correction kicked in. But I think now that markets are regaining momentum, banks can really lead the rally. Shivangi Sharda, good morning. Nice to have you back. What do you make of yesterday's move in the Bank Nifty?
Good morning, Nikunj. Thank you for having me. So we've seen that there has been a stellar up move in both the indices in the second half of the session yesterday. And looking at the banking counters, we've seen that some of the stocks have been stabilizing, which were not providing strength earlier. So now it looks very positive, and after a long consolidation and a long underperformance, now finally the index has started to move. So it looks for a bright upside from these levels onwards. And we could look at 45,250 and then 45,500 levels on a positional basis. And the support would be at 44,500 levels. So these are the levels watching out for Bank Nifty. The entire market looks quite bright and good. So any declines could be used as a buying opportunity.
Can HDFC Bank lead the charge? Because that is a stock which we've been discussing with everyone from the morning. Shivangi?
Sorry, I didn't get the stock.
Can HDFC Bank?
Okay. So HDFC Bank, we've seen that the strength has been just started. So it's made a good base near, 1550 odd levels. And still now that, it's trading below its key exponential moving average. So of course, it's gaining strength, and a tailwind from the entire market would also act on. But I believe that the stock would only gain momentum if it crosses 1616 zones, which is an important level to watch out for. So this level would be an important level. If it crosses that, we could see 1660 levels over here with a crucial support near 1580.
So that's the take coming in on HDFC Bank. In fact, on that note, we let Mr. Bhasin go. Thanks so much for making time and speaking with us today, Mr. Bhasin. But let's take some mid-cap ideas from our chartist. Kunal?
So M&M Finance is something which looks attractive. The stock is forming a very classic kind of a bullish flag or a pennant combination pattern on the daily charts. It's trading slightly below the 50-day moving average. So I believe a potential breakout of 50 DMA could lead to a pattern breakout for M&M Finance, which could be a double advantage for the stock price. So would suggest a buy 320 as a target, stop loss at 290.
Okay, so those are the top bets coming in from Kunal. What about you, Shivangi?
So my preferred pick would be on GRSC. We've seen that there has been a good price volume surge over here, and long-dated consolidation was seen before that. So the stock is now made a good base and now ready for a good upside. Now this stock has continuously moved from the last 4 months, and a clear outperformance can be seen over here. And with the mid cap at all-time high, we've seen that this stock will also be doing good. So recommending a buy here. Now the next targets which are coming out to be 945 with a support near 888 levels.
Okay, thanks so much, Shivangi, for those picks. But time now to get you the news from across the globe as to what's making headline in our News Fatafat segment. Well, Apple shares, they took a hit of 3 to 4% after reports suggested that China is banning the use of iPhone by its government workers. The reported restrictions have therefore raised concerns that Apple products could be caught up in tensions between US and China. Meantime, torrential rains in Hong Kong has led to widespread flooding across the densely packed city, submerging streets, shopping malls and metro stations as authorities shut school and ask workers to stay at home. The Hong Kong Stock Exchange will also remain closed today. Shifting focus to sports then, in great pride for India, Rohan Bopanna, teaming with Australia's Matthew Ebden, has entered the US Open doubles final. This is Bopanna's second Grand Slam final. He had earlier, reached the stage of the US Open back in 2010. Meantime, the G20 summit is all set to kick off in the next 24 hours. Security in and around the national capital region has been beefed up. Traffic measures have come into place from today in various areas, while the New Delhi district will be strictly closed for the general public and tourists till September 10th. However, goods vehicles carrying essential commodities will be allowed to enter Delhi. Global leaders from across the world have started arriving in the national capital on Thursday evening. World leaders including US President Joe Biden, French President Emmanuel Macron and Canada's Prime Minister Justin Trudeau, among others, will also attend this summit and come to India. Besides, Delhi is adorned with murals, statues, fountains and plants across streets. A giant statue of Nataraja has been installed in front of the Bharat Mandapam, and the streets have also been adorned with colourful lights. And that's something to definitely watch out for. But leaving no stone unturned, Delhi authorities have used lighting some of the prominent places, including the popular Qutub Minar. A spectacular light show was also organized at the Bharat Mandapam.
Just with the bell, what is the khabar? What is the buzz? Kya khabar hai? Let's go to Sharath for that.
Well, yes, in focus we are having Phoenix Mills, and the buzz is that its new mall in Hebbal, which is in Bangalore, is expected to be launched soon. Already this month, in the beginning itself, the company has launched its second flagship mall in the Pune markets, and in the Hinjewadi area, the launch has actually been seeing a strong response coming in from various stakeholders. Also importantly, the company will be focusing on growth assets and in the tier 2 and the tier 3 cities, and also the company is meeting a clutch of FI investors, which also includes UK based Polo Capital on September 10. Importantly, ICICI Securities also came out with this report, and they have stated that roughly 17% rental income is expected to kick in from FY20 to FY25, and they're given a maintain ad rating with a target price of roughly 1928 rupees. But there are two important factors which will keep the stock in focus. The first one is, of course, the consumption uptick expected in the festive season, and do remember 3 weeks more is actually there in this year's festive season. And lastly, in the QT itself, the multiplex has been doing a really strong job, especially from masala entertainers such as Gadar 2 as well as Jawan.
Oh, well, yes, thanks so much, Sharath, for that. But talking about Jawan, of course, that had seen a stellar opening. We had seen that the advance bookings were very strong, stronger than what Pathan had seen. And on account of that, PVR is one stock which was flying away in the trading session from around 1300 thereabouts. It has quickly run up to 1800. Shivangi, what's your view on PVR? It's best to book some profits right now, or do you see this momentum continuing?
The PVR has been, quite strong from the last 3 months, and this, strength would likely to be continue. We've seen that there has been, a stellar up move in the last 2 weeks itself. So the stock is looking positive, and the next targets which are bringing about is around 1910 levels, and 1815 would be an important support to watch out for.
Okay, so that's the take coming in as far as PVR Inox is concerned. Quickly, let's take stock of the pre-open rates as well, because they seem to have settled for now. The Nifty is suggesting that it's likely to be around that 19,770 thereabouts, an uptick from what we saw yesterday and the continuation of the momentum that we saw in the last half an hour. Sensex 2 is likely to open with a 100-point gain. In terms of stock-specific action, at least what's coming up on my radar continues to be the shipping names. So Cochin Shipyard, Mazgaon Dock, these are the stocks which at least in pre-open are suggesting that they're likely to open with a gain of around 4 to 5%. Tejas Networks is the other one. They have received some advance from TCS on account of that big order for BSNL that they're going to execute. So that stock is in focus. Sterlite Tech has had a tie-up, some order win happening there. So that stock too is holding up with a gain of around 3%. And then other names like Veroc, IRB are coming onto the screens as well. But not a big mover at all actually. It's Max Healthcare which is down 1%. There was a Macquarie note saying that the Max stock has maxed out for now. And there's Persistent Systems as well. But Nikunj, about Max Health and the hospital stocks, you track these ones very closely as well. What's your view as far as, Fortis is concerned? Because that stock was seeing a lot of those overhang on account of the corporate, structuring, etc. issues that were happening there, corporate governance things. You think these are over? And because of the spend of healthcare going up, all of these stocks are rightly placed.
See, where were these stocks versus where they are right now? What has changed fundamentally? Fundamentally what has changed is that COVID has been an eye-opener for everybody in terms of need to buy better healthcare. If you buy better healthcare, which is via the health insurance, you obviously would like to trade up. B, that's leading to demand of some of the well-established brand. B, there is massive consolidation, there is massive PE investments which have happened in the entire hospitality space. See, hospital chains are expanding. They're just going beyond metros. I mean, let's say, for example, you look at Fortis, how many branches they have versus how many branches they have now. Look at, good old Medanta. Started with just one hospital in Delhi and Gurgaon, and then it has really expanded. It's moving into Lucknow. They've gone public and they're doing a lot of efficiencies. See, the medical tourism is real now. Global healthcare costs are just getting unbearable, at least in developed countries, and medical tourism is something which they are increasing. Specifically, when it comes to Fortis, the problem with Fortis is that we don't have any clarity on open offer. Till the time clarity on open offer is not there, it's like saying that Fortis is running with one leg tied. I mean, you're running on one leg while others are running on two legs. And that is a bit of an unfair way to look at the stock. But the problem is the overhang of this entire open offer issue is going to be dragging the near-term outlook for Fortis, because if you're an institutional investor, you will not take chance. You have to buy facts. And a court case is a chance. And chance is something which, fundamentally speaking, you cannot establish purely based on possibility rather than reality. That explains why Fortis has done nothing. But back to markets, if I have to look at it, I would like to revisit power stocks, especially companies which are in merchant power, not the small ones. Adani Power, Tata Power, NTPC, JSW Energy. These are the 4-5 companies where the contribution which will potentially come from the merchant power space, I think is going to be significant. And this is one space where you actually could see the next puck moving. See, one thing is real, that in India, you will see more demand and less supply. And that is the special which we would be discussing today in terms of the power sector and where the dynamics are moving and what is the alternative. But if you're in the merchant power business, because demand is more and supply is less, pricing and the advantage of near-term tailwind of profits would be with some of these companies. So Kunal, which is the strongest private sector power company?
Tata Power seems to be the stronger name, even Torrent Power, but I think it depends on the time frame you're looking out for, Nikunj. If you're looking at it from 2020 lows, then hands down, I think Tata Power has done phenomenally well from being a stock which was, I think, around 40 rupees or 50 rupees to a point where it came back towards 298 mark. That was the high Tata Power made. It's now consolidated over the last 2 years, but then when you look at this from the 2020 lows, it's been exceptional. Torrent Power, I think in 2022 was one of the most stronger performing names. That stock managed to cross back above the 700 levels, I think, very recently. So it looks to be quite strong in that domain as well.
Okay, so that was about the power stocks, but let's shift focus back to the index and what the index calls are coming in from our chartists. For the Nifty, it seems that Kunal is suggesting a hold. Ditto can be said for Kush Bora as well, but it's Shivangi, which continues to be a bit bullish, calling a buy on dips because higher levels of around 19,900 is what she's suggesting. For Bank Nifty as well, there's a bit of a more clearer view coming in because it's a buy coming in from Kunal as well as Shivangi. Both are suggesting buy on dips, while Kush is still a bit more tentative, maintaining that hold stance. Overall, a bit more positive stance coming in for Bank Nifty.
All right, we need to go, and the markets are telling you that we are in for another strong session. So Kunal, on a scale of 1 to 10, new high in the month of September?
Yeah, 10, 10.5 maybe.
Really?
Yeah.
He even has a date set. Forget about the month. He's saying it's 28th September. That's going to be.
So you'd be amazed. 28th of
check.
March.
Post Ganpati.
It's
right?
a Tuesday.
I'm on holiday.
You'll miss out the big rally.
Yeah, please.
No, so 20th of March we formed a bottom. We were that was a day when the markets made a bottom below that 17,000 mark. 1 month from there, 28th of April is where the Nifty crossed 18,000. 28th of June, 2 months from there, where the Nifty crossed 19,000 for the first time, and then hopefully 28th September, 3 months from June, we would probably cross even 20,000.
20th. Shivangi, new high in the month of September. On a scale of 1 to 10.
9.
Why not 10?
Room for improvement always.
Okay, but 9 means, like, at least our technical experts are of the view that there is a strong possibility that we will make a new high, and that is what we need to really bring out for our viewers. While we've been focusing on the frenzy in mid and small cap stocks and the excitement in railway and defense stocks, everybody's missed the rally in the Nifty. That is something which you cannot, I would like to draw everyone's attention to. Now the point is, if Nifty regains momentum, will small and mid cap stocks accelerate more, or will they take a back seat? As per the rotation theory, they should hit a pause button. They will not fall, but they may not participate. First rates any seconds now. Not too many newsmakers actually, but in terms of the levels, well, yesterday was really a big day in terms of both the tone, the tonality, the market setup, and also the broader market. First rates, 27 points higher on the Nifty. The market breadth 1:13. That's really been the hallmark. But there is no elevation which so far has kicked in the Bank Nifty. That's why you want to see a little bit of opening up, some flexing of muscles by HDFC and ICICI Bank. So the Bank Nifty is off to a flat start. Nothing meaningful in the Nifty. It's like saying that yesterday was a good Thursday and the fall up, at least in Friday morning, I think is clearly missing. Then you want to look at railway stocks, and you want to look at shipping stocks or defense stocks, and then you want to look at power stocks. Railway stocks, RVNL, 156 rupees, IRFC, 5% higher. IRCTC really has not been the plum pick, so to speak. It has underperformed because variety of factors. We'll mark that stock. Now the real heroes yesterday, Kochi Shipyard and Mazgaon Shipyard. Kochi Shipyard yesterday I think was up 20%, it's up another 7%, there you go. And then you got to look at Mazgaon Shipyard, that again is up by another 6%. And this is what is the amazing part about this market, that the rally, that linear move, the uptrend in some of the defense, railways and some of the aviation stocks, it just is mesmerizing to say the least.
I was just noticing that most of them are almost four-digit names, right? Mazgaon Dock, you've got an HAL as well, Garden Reach almost getting there to a four-digit figure. Look at the tear that you're seeing on Mazgaon Dock. It's up 7.5% as we speak right now. Garden Reach as well. So the shipbuilding names are the ones which are really taking the fore after what's been a very, very strong and buoyant bout for both defense as well as railways. Not to say that those spaces are not looking good, but the big spurt is now coming in the shipbuilding names. What else is moving higher? Let's just take stock of all the stocks that are in focus this morning. And Landmark Cars, they've added M&M vehicles to their offerings, so let's check out with that. Of course, for Mazgaon, I must mention that they've signed a master ship repair agreement with the US government, which is why that near-term trigger and the stock holding up by 7%. There's Eris Life as well, which says they're going to continue to grow 400 to 500 basis points faster than the IPM, so that stock mildly higher as we speak right now. Page Industries, the big mover from yesterday, and they've set an FY26 target of about 80,000 crore rupees in terms of revenue. That's the note and the takeaways coming in from Novama, but not really seeing any follow through on Page. Max Healthcare, Macquarie maintains their underperform rating, saying they're maxed out for now, target price at 465. That stock is lower by about 1%. But I don't think, the market is really about the newsmakers today. It's really about momentum, and the pockets that are seeing momentum continue to be some of the select large caps like HDFC Bank and L&T. And of course, what you're seeing within the underlying trend of the entire larger infra picture. Look at L&T, that's holding at 2,900 plus levels now. It's another 2.25% move after that big spurt that you had on L&T yesterday. And for a large cap heavyweight to move with this kind of a quantum on a daily basis is quite remarkable. I just want to revisit what HDFC Bank as well is up to, and whether that's also joining hands with L&T as one amongst the top gainers. Not as much today, it's a lot more tempered. But yeah, railways, shipbuilding, Kunal, what are the first trades you're punching in?
Well, yeah, looks attractive. Again, as a setup with large cap stocks doing pretty well from where they left off yesterday. HDFC Bank is something which I would pick as the opening trade. Looks very attractive as a charts, specifically in terms of the futures. We've seen a good combo over the last 3 days. The stock showing signs of pickup of price action, breaking past above the previous high. So it looks very attractive for an opening trade.
Right, Shivangi, what are the first trades that you're looking to punch?
So the first trade, I'm looking at Maruti. The stock has, really performed, and after a long consolidation, it is coming out. And the good part is that it retested some of its recent swing highs, and now it's again made a good base to move, higher. So recommending a buy here with the next 10,720 odd levels and a stop near 10,180.